as I can say this quickly. Symbols. The brain is able to produce symbols by crunching data. In other words, data comes into the brain computer 24/7 through the modalities of the sensory apparatus: sight, hearing, taste, touch, smell. All of this data about the environment is continuously being fed in to the brain computer. Much of what is fed in is not at the conscious level. It is at the subconscious level. And if there are things that people do not want to confront, if there are aspects of reality that people do not want to confront consciously, that also gets stored in the subconscious, and it can become a part of what the brain will turn into various symbols about reality.
All right. Welcome back to Lesson 4, True Support and Resistance. And it's the reason why we say true support and resistance, because first let me first say is many ways that you can get support and resistance. Okay? Support and resistance is really no wrong levels to having support and resistance. You know, some people they take it from wick to wick off the candles. Some people do it from the bodies and whatnot. Some people do certain areas where they see the market might have did a pivot or whatnot. But there's really no wrong way on doing support or resistance. We say true support or resistance because we calculated a different way, so to speak, and we'll get to that when we get to the charts. But first, let me explain support and resistance. All right, support and resistance. All right, support. Just think about support. Support would be holding up something, right? So when we think about the market coming down, we over here on this side. When we think about the market coming down, as the market comes down, right, it makes a pivot off of this area and bounces up. Right here on the bottom, the market has found support, something that won't allow the market to continue on with its downtrend. So this would be considered as support. All right, and as the market pivots and pushes off of this support, it makes its way up, boom, and stop and do the same thing, pivot off, right? On top, this would be called a resistance, because the market has met, on its uptrend, has met resistance on continuing on the uptrend, right? So we have support for the bottom because it's supporting the market, it's holding it. All right, and then you have resistance up top, and of course, as it push away and pivot away, and it makes its way down, it meets up to support again, the same exact support that was holding it up, right? And so on. You meet the resistance at the top. Now you will hear us say phrases like, of course, ceiling and floor, because that's the obvious thing that's going on, right? The market is bouncing off a ceiling and is hitting the floor and is coming back to the ceiling and is going back to the floor, right? But that's basically what support and resistance is. Now that's the basic definition of support and resistance. The ceiling, which would be your resistance, and the floor, which would be your support. Now, this right here, we know from our last lesson that this would be a range, right? Ceiling meets floor, and it's pretty much close together. All right, but on this side over here, this is how you see it when it is trending. Because remember what we say: 80% of the time when the market is really going, it's ranging. it's going sideways. All right. Only 20% of the time is it actually going to move. So let's look at what's going on here, right? As the market starts right here on the bottom, right? That would be support. Okay? Then the market moves up and it makes its way up and it hits resistance. It pivots off and it makes its way down. Right? It makes its way down and it meets a support. Alright? Now the market pivots off of this support, right? It wouldn't be a support if the market did not pivot. Okay? Always remember that. If the market did not pivot, then it wouldn't be a support. If the market did not pivot from the top, then it wouldn't have been a resistance. You understand? So always remember that. Alright? So now, as the market pivots from this bottom that's creating a support here, it makes its way up. Now, pay attention to what's going on. As it makes its way up, it breaks resistance. It breaks previous resistance. And it continues up. And it does what? It makes another resistance. Alright? Then it pivots off. And now, once what was resistance is now turning into support. You see that? Let's look at that again. Let's go from the bottom, right? We have support. Market moves up. It finds resistance. It pivots off and moves down. It finds a support. It comes up, right? It breaks resistance. Finds new resistance. Pivots off, and once what was resistance now turns into support, which makes it very strong. Very, very strong. And the market pivots up. And it does it again. It breaks the resistance. Right? And it come up. And now it pivots off. Right? And it makes what? It makes a new resistance up top. And as it pivots off, so I want you to understand this. It comes down. But now notice this. It's pivoting before it even touched support. Right? Unlike this one, if you notice, this one actually even passed support. Right? It actually passed support here. This one perfectly bounced off support. Right? Just because it did not touch it or pass support doesn't mean that this is not support and this is not a line that's not being respected. Okay? Because what was resistance at one time is now still support. Right? And as you can see, the market did bounce up, and ain't no telling what happened in the future. But the concept of it is that these designated areas are areas that's being respected. You know, from the past, you're getting these areas from the past, and these are areas that's going to be respected when the market makes it back there. Sometimes it do, sometimes it don't. But this is the thing. This is where the 90% go wrong at. Okay? They go wrong because when a market makes it to a level, right? A lot of times the brain computes that, hey, and you convince yourself earlier that you really want to make this move when the market makes it to this area. That, hey, the market is getting here. I've been waiting for a long time to doing exactly what I wanted to do. And as soon as it hit this line, I'm going to enter for a position because I know it's going to bounce off this line or whatnot. And usually what happens is the market does something like this. It don't always be a perfect bounce off. It actually will pass the line and then make the move up or make the move down. Okay? So our thing is, we call them designated areas, right? But we like to call them information stations, because we don't make a move without knowing that the big boys are invested into that move, right? We don't move unless the money moves, right? It don't make sense, right? So what we do is we call them information stations. And what that means is, when the market makes it back to this information station, I am now going to collect more data, because we're investigating now, more data as it gets here, and with certain criteria, certain other steps, I can make my decision on the market going down. Right? I just noticed that this particular line is green and it should be red. Good people, but I'm sure you got the concept that I was getting at. But yes, like I say, these are information stations. So to say what I'm saying, listen to what I'm saying. As the market goes up, go up, it meets resistance. I can mark this off as resistance, because if the market comes back to that area, I can gain information. Now look, as it bounces off here, I mark this off, of course, as support. But as the market comes up to my information station, look, what if I was one of those guys, a level trader, one of those 90% that would be called a level trader, that waited for this market to make it to this level, and as soon as it makes it there, I get a position for going down. Right? Look what happens. It blows past this resistant level. So if they was smart and they was initiated through the KTG order, and they actually came into the community and stopped messing around, right? Then they would know that we don't make a move just because the market made it to the level. This is our information station. So we gaining information, and the information that we would get in this area will let us know that the market will probably most likely blow past this area. All right? That makes sense, right? But as the market goes up, it meets resistance. But remember, we have an information station that if the market makes it back down to it, I can gain more information right here. And it's a possibility that I can make a position going long or even short off of my information station, that the market is now turning it from resistance to now support. And of course, like I said, when the market makes it resistance turn into support, this is a very, very good spot for a long position to go up. Okay? And again, it meets the information station, it blows past it, but that's okay because we still have it. And the market goes up and it hits resistance. But look, it's finding support. Once was resistance, finding support. Got information to know that it's going up. And we could at least say that it's going to go up to the next resistance. So from here to here is actually a long trade. A good long trade position. A long position trade, I'm sorry. Alright, that makes sense, right guys? Think about what I'm saying. You might have to rewind it over and over. But when you get it, it's going to be that aha moment again. For a lot of y'all, it's going to be an aha moment like, that makes sense. Okay? Especially when you know that if the market turns it into resistance and now comes back to your information station where we don't just make a move, we gain information and it gives you the right criteria, then your resistance, now support, is very strong and we can make a move going up. Okay? Think about that for a second. Alright? And we are going to take it to the charts. We're going to take it to the chart, okay? And we're going to see what we're talking about. So here we go. We're back on the charts. Alright? And what we have here, we have the British pound against the US dollar. And we are on the 1 day chart, which means each candle represents what? 1 day on this chart. Each candle represents 1 day on this chart. Right? We know that from previous studies, right? Okay. But now, as far as talking about the support and resistance, what you'll be learning on here is how we look at finding true, what we call true support and resistance. All right. And like I said before, it's really no wrong way on how to get your support and resistance levels. I mean, if we was just going off of the eye right now, of course we would know that what this would be some kind of resistance, right? You know, a lot of people like to do this kind of stuff right here, put it on top of the wick, and we would know that this is a resistance because why? The market is making its way up very heavy, but for some reason it is having trouble passing this particular point, right? And so the market pivots and it makes its way down. So we know that's an obvious resistance. If we was looking for obvious support, then of course we would know it would be right here. All right. So there's no wrong or right way to do a support or resistance. Okay. But the way how we do it, we do a little different than everybody else. The very first thing, let's bring this up right here. This is our little checklist here. All right. And the very first thing that we do is, one thing too, let me explain too. I'm on the day chart, and what we're going to do, our steps are, we're going to get our levels on a higher time frame or a higher universe, right? Because if I get a level on the higher universe, then imagine when I break that particular universe all the way down, like this is the day, say we break this all the way down to the 15 minutes, then imagine all of the activity in between that time of that universe, of that day universe. So when the market makes it to that day level on the 15-minute chart, that's a very, very powerful area that we can gain information. Remember, these are our information stations. We don't pull the trigger just because it made it there. We're only trying to see and gather more information as the market makes it to these areas. All right. So that's the reason why we're on the day chart. Later, when we get our levels off of the day chart, we will move down to the 15 minutes, and then we will see how the market reacts to these levels. Okay. So the first thing we do is, I want you to see where I'm going. I'm going right up here to the chart area, and we're going to be using our 1 period moving average. This MA means moving average, and it's really the line chart. All right. And a lot of people don't use the line chart because they really don't know how to use the line chart, or they use the line chart for other reasons, but we're going to use the line chart for a couple of reasons. And this is one of the reasons now, to get levels, true S&R levels. What happened with the 1 period moving average, the line chart / line chart, is it only records basically the close of every candle. All right. See, a lot of people don't know that. It basically records the close of every candle. Let me show you what I mean. If you look at this little section here, let me put a circle here so I can just show you. So if you look at this little section here, right, you have candles, right? We know that the green candles, they close at the top, the red candles close at the bottom. All right. Watch what happens when I move it to go into your drop box, go down to your line, and watch what happens when I move it to the line chart. Boom. It only records the close of those candles. Like, look, I can tell that this is a green candle, and I can tell that this is a red candle. I can tell that this is another green candle, and I can tell that this coming down has to be a red candle, because it only records the close of the candle. All right. Let me show you a little bit more on what I'm saying. All right. I want to go ahead and blow it up a little bit. I did that. Went straight down here to my area to blow it up. I want you to notice these wicks. All right. If I was to put a line right at the top of that wick right there, right at that wick, when I go to my line chart, this line should be separated from the close, because remember, the line chart only records the close of each candle. So watch. Do you see that? Can you see a big difference of what's going on? So for all you guys who are on support and resistance, right? And you was having trouble before on support and resistance and really getting your levels and everything. This might be the reason why, because a lot of times you'll get these levels and they're not exact. But when you put the line chart on, you can clearly see that this is the true level. And when you go back to your candlesticks, you can see that the market did not pass this level at all. It was having trouble. So that's why we end up saying true support and resistance levels. Okay. So now let's go ahead and get rid of that. All right. You got your circle on this line. Let's get rid of that line. All right. And you got the circle on this line. So let's get rid of this line. All right. And so now we go back to our line chart, because that's where we at, using our line chart. And number one, this is the criteria for finding true support and resistance levels, KTG style. All right. First thing that we do, that I like to do, is scrunch up my chart. And the reason is, let's put this up here. All right, and let's get this out of here. Get this out of there. Got the bubbles on it. All right, so the first thing we like to do is scrunch up the charts. We went down here and we scrunched it up a little bit. All right, let's do it like this, just a little bit. All right, and the reason why we do that is because we like to look at the chart in its totality. All right, we like to look at the whole picture, the big picture, right? Because you can't get nothing, you can't get a good conclusion of what's going on if you don't know what happened in the past, right? You know, if we don't know what's going on in history, you know we're not going to know what's going on in the future, right? That's just common sense, so they say, right? But when we scrunch it up, you can see that I actually cover way more than you would if you had it on a regular thing. This goes all the way back. Remember, this is a day chart, so each candle represents a day. But look, this is all the way back to 2016. All right, I wouldn't have got all of that data if I had it at the regular. See how I just went and reset the chart? I wouldn't have had that. Look, the farthest I can go back is 2017. You see what I'm saying? I wouldn't have had that if I didn't scrunch up the chart. So we scrunch up the chart. That's the first thing we do. Scrunch it up to where it's visible for you. You got enough data, right? And the first thing that we look for, first criteria, the number one, would be to find an area where you have the market touching a low and a high at the same time. All right? Okay, let me show you what I mean. Let me get my crosshairs. Alright, so let me find a level. I see this level here. And as you can tell, do this level here. This is a good level. So let's grab this. Get us a line. We're going to get us a line here. Let me go here. You get your drop box. Horizontal line. Alright. And we're going to put a line right here, and I'll explain why. Alright, let me explain why. Now, like I said, it has to be a level. One of the criteria that you would want to look for is a level that is being touched by either tops and bottoms or bottoms and tops. It really doesn't matter in which order. It need to be touching them at the same time. So if you look, as the market comes down, come down, all right, you can see, let me get my pointer again. As the market come down, you can see that the market pivoted off of this line right here. All right. And so this is a bottom being touched. This is a support that is being touched right here. All right. As the market goes up, it passes it, come up, and you can see it's being respected as the market doesn't make any more heavenly highs or any heavy lows. So this is being respected. This line is being respected. But you can see that it's being touched by support. Right here is being touched by what? Resistance. You see that? It's being touched right here. Let's get that bubble out of the way. It's being touched right here. The market stays under. Look, and it finds its way to become resistance again. Right? And if we go further, I'm sure it's being respected even more. It passes it, come down, and stays right in this area. So this is a good level to have, right? And what we're going to be doing, right, is basically finding levels just like that, where it's touching tops and bottoms. Let's kind of blow it up a little bit more. Not that much. Okay, that'd be good. All right. So what you do is you find more levels like that. Let's see. See if this would be a good level. All right. Let's find one more like that. Okay. All right. So this is a good level. Support. Support. Resistance. Resistance. Support a little bit. Come back. Go and do a little turn around, do-si-do, and what we have, support, right? So that's a good level, right? Now the second thing that we would be looking for, right, after you done found all those kind of levels, another criteria you can look for is when you have them touching tops and bottoms like this. Another good thing to look for, which would make it extra stronger, is if you have what is called a large candle breakthrough. And let me explain what I mean. If you look at this right here, we have the bottoms touching, we have tops touching, So we have a series of bottoms and tops touching, supports and resistance touching. But if you look right here, let's blow that up. Blow that up a little bit. Bring it back over here. Now if we look right here is what should be a big candle breakthrough. Let's see, let's put a circle here, this area, right? And what you need is, look, unscripted. What you need is a huge candle to break through. So this here is a very, very good level to have, because you have your tops, you have your bottoms touching, a series of those, and you have a huge candle that broke through it. Okay, so this is a very, very good level, right? So let's scrunch it up again. Let's go back to our line chart, right? And the third thing that you can look for that would make it a good level, right? Because sometimes you might have a level and it's not touching tops and bottoms at the same time. The third thing that you can look for is multiple touches on a level. So let me show you what I mean. Let's go ahead and get us another horizontal line. And let's find a level that have multiple touches. Let's see. Okay, let's do this. Okay, so look, as you can see, it's not really touching any tops, but you have a bottom. You have a good breakthrough here. You see that? Because it never hesitated here. It never pivoted up. So you know this is most likely a big candle breakthrough. So that makes it strong, right? Market goes up. You really don't have no tops touching. You actually do have a top coming to meet it, but what we're looking at are multiple bottoms. Support. This is even considered support because the market went under, but it snapped right back. So this is support. So we have a very, very good level here because we have multiple touches at the same level, right? And the thing is, if you haven't noticed, if you can get all three of these to coincide with each other, if you can get all three of these attributes on a level, then that is a very, very strong level. Okay, very strong level. So what we're going to do is we're going to go ahead and just get a couple of levels, right? Let's go ahead and get we got three of them. Let's go ahead and make it let's go ahead and make it an even number 6. We'll just see how those particular, what the market does when it gets to those levels. So this is a pretty okay level, because why? We have tops, respecting it, tops. You have a big candle breakthrough, I'm sure, right here. Market comes down at what? Resistance turned to what? Support. That's right. So that's a very good level right there. And let's go ahead and get another one. Let's see. I like this right here, and the reason why is because it's such a bird nest right here. And when I mean bird nest, excuse me. When I mean bird nest, it's touching tops, right? It's touching tops, it's snapping back. Touching it, snapping back, touching it, crossing it, snapping it, touching it again. It's respecting it by staying under, sustaining sales. It's coming back, touching it. So as you can see, the theme is, it's almost like this line here is like a magnet, and it's attracting the market to stay in this place. So I like to mark off this place because this is a heavy area. Full of orders will be up in this area, and the market, the big fish, like to be very greedy. They will come back and get some of these orders. So that is a very good level right there. Okay. Let's grab one more. I think we got 1, 2, 3, 4, 5. Let's grab one more. Of course, I like to do stuff like this on the bottom because that's a nice good old level. You have bottom, respecting this line. It bounces off it, comes down, it's coming back to try it again. It tried, but it snapped back. So that's a support there, guys. Remember on the other exercise when I say that the market could touch it perfectly, it could bounce off it almost like a soft touch and just soft lay it up in there, or it could come like almost like a trampoline and bend into it and snap right back and shoot it up, kind of like a slingshot. Keep that in mind. All right. So as the market come down, it's respecting this level. So this is a very good level, right? And going forward, I might get one of these top levels too, because I'm not sure exactly. Let's get this one here. I'm sorry. Let's get this one here, because this is actually multiple touches right here. Tops respecting, touching it, soft touch, mushy touch, slingshot. Keep that in mind. All right. I'm giving y'all gold, people. I'm giving y'all gold. All right. So I think we got enough levels. We got seven lines, right, on our daily chart, right? And what we're going to do is, right, we go right down and we go down to a lower time frame, because remember what I said, if we go down and if we go and we find levels on a higher universe, on a more stronger and powerful universe, imagine coming all the way down to a lower universe and displaying that power. Does that make sense? So let's go from the day chart, all right, and come right over here to the 15. All right. And we go ahead and we want to reset the chart, and we want to go ahead and put it on our candle chart. And you want to go ahead, this is an exercise that you guys can do. You want to go ahead and you want to take it as far as back, because remember, the reason why you're not seeing all the lines that we had on the bigger time frame, like for example, if I go back to the day, you'll see more of our lines. See that? But because we're on a lower time frame, Remember, each candle tells a story. And when you go down to a lower time frame, it actually gets concentrated in that story. You're really, really breaking the story all the way down to figure out how this became a mature day candle. So once we get down to the 15-minute candle, you won't see all these lines. That's what makes it even powerful. It won't be jumbled up like that. So you only wait for the market to make it back there on the 15-minute or lower time frame, whichever one you choose. Okay? So let's go back to the 15-minute. Okay. So now we're on the 15-minute. And we're gonna bring it all the way back just because we're doing the exercise to see how the market is reacting to these levels. These are strong levels, so when it comes, we wait for it. These are information levels, so we sit around and we wait for it. So we take it all the way back, right? And we're going to go ahead and blow it up a little bit so we can see. Okay. And what we're going to be doing is we're going to be paying attention. I want you guys to pay attention to what they call the hard right edge. That's that void that you don't know what's going on after this point. You can see what's going on in history. You say, oh, yeah, the market looks like it's going up. But when you get to this hard right edge right here, let's pull this up. Let's do this. Did you see how I did that, guys? If you want to get it bigger, you come over here to the side, you grab that, you bring it down, up and down. You can move it right here on the numbers to move it up. So let's move it like that to make sure that we can see it good. And so when you have the hard right edge, right, when you have the hard right edge, you're not going to be able to know what's going on in the future. It kind of throws you off, right? That's what the 90% gets very, very tripped up in, because they trade the here and right now. But we're better than that, right, guys? We're much better than that, and we don't do that. We're remorse, and we don't follow the herd, so we let them do that, right? So let's do this. We're going to do our exercise. We're going to go what is called bar for bar or candle for candle. You come right here to your right pointer. You run your mouse down to the bottom, and you're just going to press. And that's going to give us each candle each time. And all we're doing is waiting till the market makes it to our information area. We don't do absolutely nothing until that time. So let's see. And it's going. Okay, we're going to have to do this. Get it back right. Okay. See, we go fast. Wow, I haven't met one yet, huh? See if we can find one. Okay. All right. Finally. Okay. So we got the market to make it finally to a, see what I mean? We're on a 15-minute. Remember how many lines we had on the day? Right. So now we're on the 15. We finally made it down to our information station. Right. So let me back this up a little bit. Let me back this up as we make it. So the market finally makes it to our information station or whatnot. Blow it up a little bit. Let's bring this up right about there. All right. So remember, we don't do nothing until the market makes it there so we can gain more information. So let's see. As the market finally gets there, so now, boom, it done came to our information station, right? With the right criteria for the right steps and the right information, we would expect or anticipate maybe a move to bounce off of this now support area, right? But we don't know that. We don't know that right now. Like I said, we're not making a move right now. We're just trying to find out what happens when the market, what kind of reaction the market makes when it make it to these particular areas. Okay, so let's see. Bounce, check it again, and look what's going on. It bounces off. It literally pivots off of this area. All right, you see that? It's pretty good, right? So let's go to another one. Let's see. Looks like it's coming back. Let's see what it does. Is it going to respect that line? Is it going to respect that line? Let's see. Coming close. Let's see. Is it going? Any respect? Almost went through. You saw that? Bounced off. Coming back to check it again. Kind of respecting that line, huh? And boom. The market makes its way up. Continues to make its way up. So let's see if we can find us another line. See if we can find us another one. Back again. Back again, back again. It came back to the same line. You see how respected this line is? Alright. Let's see what it do this time. It's bouncing off. See if it come back to check it again. Coming back again and bouncing off again. Look what happened. Another move up. Not far, huh? A little gap down. This gap here, guys, mean that this is the weekend. Friday, Sunday, weekend. No trading on the weekend. That's why you get the gaps in the market. But notice how the market is still respecting this particular line here. Alright. See what it does this time. Bouncing off, respecting it. Going down past it. Alright. Let's bring this up. Bring this up. Bring this up. Now we under it now. Let's see if now this support, one-time support, will ever turn into a resistance. It already came actually up and bounced off it. It came down to make this into a resistance. But let's see if it comes back to it. Okay. And it goes. Keep following down. Might actually continue to keep going down. Yep. So let's see. Let's bring this up. Let's bring this all the way up here. Look what we got down there. Another place, another information station that it might be going to. So now we have two. We have this that could come up and make this into a resistance, and you can get information from there, or it can continue to keep going down and turn into support right here. So we have two. We got them cornered, baby. We got them cornered. Think about it. So let's see. Let's see. Let's put it like this. The market can't go nowhere without giving you some kind of indication because you got them cornered. Okay? So let's see. Let's see. Okay, so now we're getting close. Don't even want to go down now, huh? Let's see. By the way, as the market pivot, this is actually a support too, right? And as the market goes up and pivot, this is a resistance, right? But for now, let's just deal with the ones that we got on the high time frames. All right, I'll speed it up. So what is this called, guys? What is it called? If I had a line here, and a line here, What would this be called? What is this? Right, a range. A range. But like I said before, you should be licking your chops when you see a range, because that means it's opportunity that's going to happen after a while. You just have to be patient. You have to wait for it. The smaller candles that I see now indicates to me that this is a time that is not good for trading right now. We'll get into that on another video. Trading times and stuff in a specific time that you want to trade. Specific time that the market actually moves. Unless there's a news feed or anything like that. Alright, so now look, boom, we got it to come down to our information station. Let's see what it do. Is it gonna respect it? Is it gonna continue to keep going? No respect on it? Look like it might be continue to keep going, huh? Bring that up. Okay. And we got another one coming up behind it anyway, so just because it did respect, and remember, look at this big old candle that broke past it. So this is a good line for later on. Matter of fact, to be honest with you, you know it's a good line because look at how the market comes up to test the line, to come and test it. What would have been support broke through, now is resistance. Resistance, right? It was support somewhere before. Now resistance, don't even want to make it up there. Try it again and don't even give you a high. Remember we saw that before? High, no more high, market falls down. Remember that. So let's see what's going on with this information station. And then I'll give you guys assignment. After this, let's go on. Let's see. Alright, we finally made it there. See what happened? It's bouncing off. One time, let's see if it tested again. It tested. Notice how it's not making any lows. Not making any lows. So can we get any highs since we're not getting any lows? Let's see. Alright, up, getting a low, got a low. Wait, let's see what happened. Now, what's now support is now what, guys? Let's bring it up here. Sure we don't move nothing so we won't miss the element of surprise. Okay. Alright, so what we got? We got support, now resistance. Let's see. We're getting a bounce off. Coming to check it again, and the market is going down. There you go. Came back to test it one more time before it bounced off. So this S&R, this support and resistance, this information station right here is powerful because it hit a support, turned into resistance, checked it again, coming down. I'm sure it's probably going to check it one more time. Might want to go back up past it. Let's see. Gap. Weekend. Right? But gap. But look where, this is amazing, guys. I'm going to show you this and I'm going to give you an assignment, okay? I want to show you this. Look at this. Look at where it gapped at. Remember, this is Friday. Saturday, no trading. Sunday morning, Sunday afternoon, it gapped all the way from down here to up here. It's almost like a magnet to that area. How did it get so perfectly to that area? Must be a very, very good resistance, support and resistance. Okay? Alright? So, your assignment will be to go to your higher time frame, your pick. Okay, your pick of choice, any higher time frame. And when I mean higher time frame, you see I went all the way to the day, but you don't have to go to the day. You can go to the 4 hour. You know, if something like if you go to the 4 hour, then let your lower time frame or your lower universe be something like a 15 or a 5 minute. Okay. And I want you to See if you can find some levels. I want you to put as many levels, because right now you're not going to know which levels are the most important. So the more levels that you put on your screen, you will see a lot of opportunities. But again, remember, you're not looking to enter anything. You just want to put those levels there, and you want to see how the market reacts to the levels. Do it just like how I did. You want to go bar by bar or candle by candle. Okay? Do that for a while. Do that for a big while. Also, I want you to notice stuff like this. If the market is coming down in this support, it comes up to make resistance. When the market makes it back up, look what it gave you. What kind of candle this is. Let's put a line here. Who stepped in front of that train right there? Think about that. Let's make that blue. Let's make that blue for the guy. Or better yet, let's make that green for the guy with the dollar symbol on his chest. Alright? The big boy. You know who it is. Right? Who stepped in front of that train? So now look what we have. We have the market coming down to your very, very powerful high universe area, designated area, your information station. It's bounced off and it's broke through, and it's making it now from support to resistance, and it comes up and it gives you this as a test. Who in the world is doing this? It's not the 90%. The 90% is the ones that bought all the way up, because remember, this was a what? A full green candle, right? So when you look at it, if you look at it at the hard right edge, that void that people don't see and they trade, think about it. At one time when this candle was all green, what did you think that the 90% was thinking?
Oh no, I should have got in down here, of course, because, you know, I supposed to buy low and sell high, and I didn't get in. So now I'm missing out on this move. So I need to go ahead and buy. Right? And what happened is, all right, let's get some arrows. Right? And what happens, you get a whole bunch of people what? Buying. Let's make that green. And they buying. And they buying. And they're buying. And the herd just continues to buy high, right? Because remember, at one time, this was a green candle. All right? So once they buy, the big boys find opportunity to take all of that buying and put some money into some sales, trillions of dollars. We've seen it. I showed you that before, right? Trillions of dollars to put all of their money on top and sell into all of this buying that the herd is doing, and ultimately turn the market around. You see that? So all these people that thought the market was going to go up, they were sadly mistaken, because the market ended up turning around and taking all of their orders and feasting off it. You see? So take your time, practice on that. We spent a little bit more time on trends and ranges. I'm sorry, not trends and ranges, but we spent a little bit more time on designated areas, support and resistance, because it's very important. I know I say that on every video, but everything I say, everything that we put together for you guys is very important. So make sure that you study it hard. This is not nothing that's going to be an overnight thing, as you can see, right? Nothing too good, you know what I'm saying, comes too easy. So always remember that. And if it's too easy, I don't know if you would want it. All right, but that's just me. But study, practice, put as many levels as you possibly can. There's no right or no wrong right now. I just want you to get familiar with that. Then go down to your lower time frame and see how the market reacts to those levels. I'll see you on the next one. Peace, peace, peace.